I think it's exactly 7:10 and I think we should be good to go. Fine? Okay. So very good evening to all of you. My name is Manoj Nodial and I welcome all of you to this first session of International Tax Academy's ADIT Preparation Batch. And this would be the first session, as I've already mentioned, and that would be taking up the basics of TP, that is transfer pricing. Now at the very outset, I'm very happy to know that the group that has joined us today, and I hope some of the members will also be joining later on, is a very diverse group consisting of seasoned tax professionals, seasoned CAs, big four corporate tax professionals, even tax lawyers, tax litigators, and we even have, of course, we have ADIT exam aspirants. So it's a very diverse batch, and this is how it was meant to be. So because of this diversity in the batch, the basic background, the knowledge background of this batch would also be obviously diverse, and therefore the batch would have a very diverse set of expectations from the session here and then subsequently as well. So this puts a very heavy onus upon me to create and deliver value to each one of you. I mean, every one of you should feel that yes, you have gained value, you have derived value out of the 2 hours that you're going to spend here. And accordingly, so I'll make a very humble promise to every one of you, aspirants, ADIT aspirants, seasoned tax professionals, tax lawyers alike. And my humble promise is that by the end of this session, each one of you can expect to have a very clear understanding. I repeat, each one of you can expect to have a very clear understanding of the arm's length principle, ALP, which forms the basis of the entire practice and knowledge of transfer pricing. Now when I say the basics of arm's length pricing, then I would bring in that, I would include the background that leads up to ALP, the definition of the ALP, the legal basis for ALP, the concept of ALP, and then how ALP is gradually applied to practice. Fine. So this is this entire body all of you can expect to have in your arsenal at the end of this session. For seasoned tax professional, let me mention this one point very clearly. Don't believe that it is very basic, and you know, I know that all of you would be encountering these principles very frequently, but still take it from me that if you understand these concepts, then you would be able to apply these concepts to any diverse number of practical real life problems that you would encounter in your practice. So just stay with me. And as a special thing for special attraction, special treat for the seasoned tax professionals, if time permits, then at the very end of the session, I'll have a very brief discussion regarding a very prominent case, because seasoned tax professionals are quite intrigued by the cases. All of us are, but it's more relevant for them. So I'll have a very small discussion, very brief discussion regarding a very prominent case, Apple case, Apple Ireland. I believe all of you must have definitely heard about that. And I'll demonstrate that how ALP, which is traditionally assumed to be applicable only in cases of transfer pricing, was also applicable there. In fact, the entire Apple case hinged on the application and then demonstration of the ALP. So that will be especially for the seasoned tax professionals. Obviously for ADIT exam aspirants, because this batch is an ADIT preparation batch, that case is a part of their syllabus. So it is relevant for you guys as well. So you have to be specially tuned to the entire lecture that is going to follow, and even for the case. For especially for the ADIT aspirants, for all the international tax exam aspirants. Whatever we do in this class, starting from the very basics, every word of it is a part of your syllabus for ADIT examination. That is module number 3.03, module number 3.03, which is the transfer pricing module. So you have to pay special attention to the entire content that is being delivered here. Fine. So with these words, let us begin. I believe I am clearly audible. Fine. So I'll assume that it's a yes, and the board is also clearly visible. Fine. So I'll again assume it as a yes. Okay. I will deliberately go very slow because this is an online mode. I speak very fast, but then I have to consciously apply brakes on my speed. If any one of you feels that I need to further slow down, send me a message here. I'll even further slow down. Fine. Okay. So, what is the framework for today's class? We'll start up with TP. What is meant by? We'll start up by seeing what exactly is the definition of TP, what is transfer pricing. Then I will take you further. I'll take you to a concept known as separate entity approach, transfer pricing. Then we move over to separate entity approach. From the separate entity approach, we will move over to the arm's length principle. This is the focus. From this arm's length principle, we look at the definition. We will also look at the basis, legal basis for that matter, and we will then look at the concept or the elements which form the ALP, elements, constituent elements. Fine. Once this is done, then we will move over to the application part. Then we move over to the application part, application of ALP. And in this application of ALP, we will look at a very famous term that you all must have encountered, heard, applied. That term is comparability analysis. Comparability analysis. OECD says that this is the heart and soul of the entire practice of TP, heart and soul of the application of the arm's length principle. From comparability analysis, we will move over to CA. For example, this is CA, comparability analysis. From comparability analysis, we will move over to economically relevant characteristics, and these economically relevant characteristics are nothing but they are better known as comparability factors. So I think by this time 2 hours would be over, and accordingly we'll have a case discussion at the end. Right? So keep this framework in mind. Transfer pricing, separate entity approach, ALP, definition, basics, concepts or elements, then the application of ALP, comparability analysis, and then economically relevant characteristics. Right? So this is the agenda for today's class. Right? Now, all of you must have received 3 screenshots that I have sent earlier today. The first one was related to associated enterprises, and the other two screenshots were relevant for ALP and comparability factors. So please keep those screenshots handy. Fine. Now, first part, TP. What exactly is transfer pricing? Better known as TP. Transfer pricing. Transfer pricing. What is transfer pricing? So transfer pricing, in very simple terms, is defined as pricing of intra-M&E group transactions. Pricing of intra-M&E group transactions. Transfer pricing is a mouthful, so it's popularly referred to as TP. This is what I'll use, TP. TP in very simple terms is defined as pricing of intra-M&E group transactions. Pricing of intra-M&E group transactions. Now, before we start looking at this definition, let me tell you, transfer pricing is I'll not say that it's a very easy subject. Had it been easy, then everybody would have been an expert in this field. No, it's not. Transfer pricing is quite an evolved subject. It is an intellectually advanced subject, so to say. And that is why if you are to begin learning the field of transfer pricing, the body of transfer pricing, then my dear friends, you need to start learning a new terminology altogether, because there are specialized terms which are very commonly used in the field of transfer pricing. In mathematics, we use certain terminology. For every field, there is a certain terminology. So transfer pricing is also not different, and that is why we have certain terminology here as well. So we'll look at all those terms gradually, but you need to start learning those. Fine. So pricing of intra-M&E group transactions. Now, if we are to understand this definition, what is this? Pricing of intra-M&E group, what is intra, what is M&E group transaction? I take up everything. Fine. See. So the relevant point which needs your attention here is, first of all, M&E group. M&E group. M&E. And then there's one more very important concept, the concept of associated enterprises, in short known as AE. M&E group, M&E and AE. See how these three are interlinked to understand, which will help you to understand the scheme and the concept of the definition that I just now mentioned. Pricing of intra-M&E group transactions. Fine. So first of all, M&E group, M&E and AE. Now, although I had sent in the group earlier, in one of the weekdays, I had sent the OECD transfer pricing guidelines that I have in my hand. OECD transfer pricing guidelines for multinational enterprises and tax administration. The latest version that was released this year in January 2022. There are other documents as well for transfer pricing, UN Practical Manual, EU Joint Transfer Pricing Forum, US Treasury Regulation 1.482. But believe me friends, OECD transfer pricing guidelines, they form the fundamental, the roots of the practice of transfer pricing all over the world. So if you are to become a sound TP professional, then you will have to master these guidelines, and together we will master them. There is no point. But yes, they are abstract, very hard to understand if you read them firstly for the first time, but with practice it can be done. So it contains glossary, and in glossary you will find these three terms. Now let us look at what exactly OECD says that what is the meaning of M&E group, M&E and then AE? I don't think so you'll be, if you are able to take on the required page, then I'll tell you the definition of M&E group is given on page number 23 of the guidelines. If you do not have, don't worry, I will read them very slowly. Multinational enterprise group, M&E group, a group of associated companies. One second. So at page number 23, OECD guidelines say that M&E group, multinational enterprise, M&E. M&E group is a group of associated companies, with business establishments in 2 or more jurisdictions. A group of associated companies with business establishments in 2 or more jurisdictions. And then immediately after that, on the very same page, the next definition is multinational enterprise, M&E. M&E is what? M&E is a company that is a part of an M&E group. Get your point? So M&E is a company that is a part of a multinational enterprise group, M&E group. And what is an M&E group? M&E group is a group of associated companies. Group of associated companies or associated entities. Is it clear? Group of associated companies or associated entities with business establishments in 2 or more jurisdictions. See, what is the meaning of M&E group? M&E group is, we have supposing this is US, this is India, this is, for example, UK, this is Google US, Google US, this is Google India, this is Google UK. So this entire is a group. This entire is a group of associated companies. Google US, Google India, Google UK, they all form associated companies. Why? Because they are the part of the same group. And this entire group is known as M&E group. Is it clear? And each one of the entities, Google US is an M&E. Google India again is an M&E. Google UK is an M&E. Google Australia, M&E. Google Ireland, M&E. So each of those individual units of Google in different countries becomes an M&E, and each of those groups, each of those entities, companies combine to form a group which is known as an M&E group. In this case, the Google. I hope the definition of M&E group is clear to everyone. Fine. M&E group, the group of individual companies which are M&Es. Now, before we move further, there is one more related term. Associated entities. Because the definition, as I just now read, said that M&E group is a group of associated companies. So, we've seen these two definitions. Associated entities or associated companies is remaining. Let us look at this also, because this is very, very, very essential, very important. Fine. So, I'm going to rub rest of these things. Associated companies, or better known as associated enterprises. Associated enterprises, popularly known as AEs. Right? Associated enterprises. Again, this concept of A is, why am I dwelling upon this concept in a fussy manner? Believe me, I'm not being fussy, but I'm not being finicky or fussy, but believe me, this is very important because this forms the basis of Article 9, which will form the root of ALP. You will have to have a clear understanding of what exactly is meant by an associated entity or associated enterprise, and only then you can progress further. Now, I'll give you an example. See, we have two companies. We have, for example, company A, company B. Okay? And then there is another structure in which we have company A, company B, and we have company C. Mind you, we are taking up associated enterprises in the context of M&E group, right? M&E group said, the definition of M&E group that I read from the glossary, it said very clearly that M&E group is a group of associated companies. So associated companies, the concept would be relevant only for M&E groups. Fine. So in the context of M&E groups, I have drawn two structures. Two companies A, B, and then two companies C, A, and B. Let us draw one more company here, C company. This structure is such that company A owns company B. It's not necessary that it should own it 100%, but say partially. And company B in turn owns company C. Again, fully or partially, that is not the case. Fine, that is not the point of consideration. But A owns B, B owns C. Fine. So in this case, A, B and C are all associated entities or associated enterprises. Why? Because, as I am going to just now show it to you, Article 9.1, Article 9.1, Article 9.1A and 9.1B of the Model Tax Convention very clearly define, specify what are the conditions for the companies to become associated. Right? So one of the conditions, that is in 9.1A, it specifies that two or more enterprises are associated with respect to each other if any one of them participates in the management, control or capital of the other entity. Fine. So in this case, A is participating in the management of B, B is participating in the management of C, A can also participate in the control and capital of B, B can also participate in the control and capital of C. So as per the definition of Article 9.1A, A, B and C, they are all AEs. And of course, they are all a part of one M&E group. Fine. So this is a M&E group. These are all M&Es. M&E A is an M&E B is an M&E C is an M&E, and these three M&Es which are a part of this M&E group are all AEs or associated entities. I hope it should be clear. Now, second case. In this case, A was owning B, B was owning C. In this case, that is not the situation here. What do we find in this case? That C, another person. C is a person. Person may be a legal person. That is, C may be a company, or may be a person, individual, natural person. That is not the point. C is a person. In this case, C is controlling both A and B. Again, partially or fully, directly or indirectly. You can have several interpositions in between. We will see that is also included. But the point is that C, that is another person, is controlling or managing or participating in the capital of two entities, A and B. Then even in this case, A, B, and supposing C is also a company, in this case also, therefore, A, B and C all will become associated companies or associated entities with respect to each other. Right? So A, B and C all are associated entities in this case as well. And again, this is a M&E group. M&E group. With this background, let us read what is mentioned in Article 9(1)(a) and 9(1)(b). If you can, I would request you to refer to the first screenshot that I sent you today, because I am going to do the same. I am going to read from that screenshot. Right? Obviously, this is the Bible. This is the OECD Model Tax Convention. This is my LLM Mehnat. This is, so I'll read it. I'll read it aloud. Here it is. Article 9. I believe every one of you have opened the first screenshot. Please do so. Article 9, Associated Enterprises. 9(1). Article 9(1). Where? Article 9(1). Where? Then you have A. So basically we are reading Article 9(1)(a), where an enterprise of a contracting state. Contracting state means country. Don't worry about that. An enterprise of a contracting state participates directly or indirectly in the management, control or capital of an enterprise of other country. Case number 1. Are you able to see? Enterprise of country A was participating in the management, control, capital of an enterprise of other state. A was in country A, B was in country B, and C was in country C. Fine. So these are separate countries. A was participating in the management, control, capital of B. B was participating in the management, control of capital C. So in this case, as per the provisions of Article 9(1)(a), A, B, C are all associated entities. Clear? Second case, that is mentioned in Article 9(1)(b). The same person, C, participates directly or indirectly in the management, control, capital of an enterprise of a country and an enterprise of other country. So C is a person that participates in the management, control, capital of enterprise A and enterprise B. So even in this case, as I have already explained to you, A, B and assuming C is also a company, all these companies become associated entities. I believe this explanation should be very clear to you, because from now on we will use this term very frequently. Not associated enterprises but AEs. AE1, AE2 means associated entity 1, associated enterprise 1 and associated enterprise 2. Fine. So with these three terms clear, let us look at the definition of TP where we left. TP I defined as transfer pricing, pricing of intra M&E group transactions. So I think now every one of you, with the understanding that we have had just now regarding M&E group, M&E and AE, now you would be better able to appreciate the significance or import of every word of this definition. Pricing of intra M&E group. Intra means within. So meaning to say, this is M&E group these are different countries. Country A, company A, or AE, better write AE1, AE2, AE3. So AE1, AE2, AE3 are all MNEs. They are a part of this MNE group. Fine, and they are all associated entities. Yes, yes. So transfer pricing is the pricing, and obviously when they are a part of this M&E group, they would transact between them, they would interact between them. So supposing AE1 sells something to AE2 and then it gets paid. So this is a transaction. Similar transaction takes place between AE2 and AE3. This is a transaction. So transfer pricing is nothing but pricing of intra M&E group transaction, meaning to say transfer pricing is the pricing of these transactions between AE1 and AE2, between AE2 and AE3, and between AE3 and AE1 if there at all are any transactions. Pricing of intra M&E group transactions. I believe the definition of transfer pricing should be clear to everyone. Now, I remember when we were having our basic transfer pricing module during our advanced LLM in Leiden, I posed a question. A very senior fellow had come to deliver the lecture. He was a course coordinator. I had asked a very simple point, sir, what is the significance of the word transfer? What is the significance of the word transfer in transfer pricing? And I must say, at that time I was a novice. Well, I'm still a novice, but still. And he had to stop for a moment to think, what exactly is the significance of the word transfer? Transfer. Transfer pricing? Transfer? What? Transfer of what? Again simple. Again it's very simple. Transfer pricing. We just now seen pricing of intra M&E group transactions, and therefore the obvious phrase next becomes transfer price. Transfer price. What is the meaning of the word transfer price? Transfer price is the price at which transfer takes place between two AEs. Transfer of what? Transfer of tangible property, intangible property, provision of services, and so on. So transfer price, the significance of the word transfer is that it indicates that goods and services are getting transferred. They are physically getting transferred between one AE and another AE. Like this. AE1, AE2. This AE1 licenses intellectual property to AE2, and in turn AE2 pays a royalty. So, are you able to understand the significance of the word transfer? What is getting transferred? Property is getting transferred from one AE to another AE. Is it clear? So, transfer price is the price, royalty price. Transfer price is the price at which property, intellectual property, is transferred from one AE to another AE. And the general term applied to this phenomenon is known as transfer pricing. I believe very basic, but a detailed discussion was required. Significance of the word transfer, AE, M&E group. This should be emblazoned in your mind in a crystal clear fashion, because you are going to build a complete edifice, complete building on these fundamental principles. Fine? So I assume that this should be clear. If at all there is any issue, any question, then at the end we can have a little discussion. So don't worry. But I think it should be clear. That is why I have dealt with this concept in such a detailed manner. Fine? So let us move ahead. TP we've done. Now the second part in our framework was what? Separate entity approach. Let's move ahead. Separate entity approach. separate entity approach. Now the game begins. Separate entity approach. Separate entity approach. Now, I think, I don't know whether you know it or not, but at present, the share of the intra-mini trade, Google India, Google US, Nike India, Nike US, and so on and so forth. The share of this intra-mini trade that is trade within the M&E group, the share of this intra-M&E trade as a percentage of the global trade. Any idea? I think it's close to 60%. I mean, it's either it's 60% or it's more than 40%. I think it's 60%. But even if it is 40% on the conservative side, still it constitutes a bulk of the global trade, isn't it so? Right? So M&E trade is a reality. M&Es are huge giants. They operate across countries. That's the theory of M&E firm. That's a part of economics, industrial organization. I'll not deal with that here. We can have a discussion if at some point I feel it would be essential, but it's not required right here. Meaning to say, M&E groups very important. M&E trade very important. So this started happening in the latter half of the last century, 20th century. When the volume of the M&E trade started increasing, what happened that OECD, now another term, OECD, obviously you know this, Organization for Economic Cooperation and Development. OECD initially was an organization of G20 countries, group of 20 G20 countries, but as of now the number of member countries in OECD, I think it's 34. I think the number of countries, way more than 20. So the OECD member countries decided that if we are to take care of this M&E trade, then we need to do something. Okay, we need to tax them. Obviously, we need to tax them. Fine, but we need to tax them in an equitable manner. There should be no inequity that while we are taxing them, there is double taxation. There is a problem of double taxation. So OECD member countries thought that we need to have certain principle in our hands that ensures equitable treatment, that ensures equitable treatment, no impediments to international trade, and simultaneously that approach should also minimize the risk of unrelieved double taxation. So these were two guiding principles: equitable treatment of M&Es and minimizing the risk, minimizing the chances of unrelieved double taxation. Double taxation, as everybody of us knows, is taxation of one item of income twice. Types, there are several types: JDT, EDT. I'm not going to go into details right here, but double taxation of one item of income twice. Double taxation per se is not a problem. The problem is unrelieved. So OECD thought that we want an equitable treatment, and we also want to minimize the risk of unrelieved double taxation. How do we achieve this? So in order to achieve this, they came out with a principle. They came out with an approach, and that approach is this: separate entity approach. That approach is separate entity approach. Separate entity approach. And now you see separate entity approach. Separate entity approach. What is separate entity approach? Separate entity approach is an approach according to which the AEs that we have just now seen, we have seen country A, AE1, country B, AE2, right? This is an M&E group. This is an M&E group. This is an M&E group. AE1, AE2, two associated entities. This is an M&E group. Now we know that they are associated. They are M&Es. They are part of this M&E group. But as per the separate entity approach, OECD conceptualized that these AEs are functionally independent and separate. Functionally independent and separate, meaning to say they would behave as if they are not associated, which is not the case. We know that they are associated, isn't it? The very concept of associated entity says that they are interlinked by way of control, management or capital sharing. But separate entity approach is including a fiction, a legal fiction, that these are separate entities. These are separate entities, these are independent entities and they are not related. Fine. So separate entity approach says that we will treat, OECD said that in order to achieve those two principles, principle of equity and principle of minimizing of unrelieved double taxation, for those two, for achieving those two objectives, we will incorporate a new approach, new principle, and that principle is that we will assume that these two are not related, they are separate entities. So this is known as a separate entity approach. Now let me give you a brief citation for this, for that matter. This was as far as the explanation went. Fine. So again, guidelines. I am reading from the preface, which nobody reads. OECD member countries, very slowly, OECD member countries have chosen this separate entity approach. OECD member countries have chosen this separate entity approach as the most reasonable means for achieving equitable results and minimizing the risk of unrelieved double taxation. I hope it should be clear to everyone. Right? So, separate entity approach was adopted by OECD in order to maintain equity and to minimize the risk of unrelieved double taxation. Fine? Okay. This was separate entity approach. Let's move ahead. Separate entity approach taken care of. Now, so if you have now, the next question automatically becomes, it's fine, we have adopted separate entity approach, but the next question is, how do we apply this? How do we apply this separate entity approach? And I am bringing you to the point of ALP. This is the background of ALP. This is the background of ALP. I don't think so you would have delved into such great depths. Stay with me. So the next question becomes, how do you apply separate entity approach? Now, separate entity approach. How is separate entity approach applied in practice? Now, in order to apply this separate entity approach, OECD says, in fact I have just now mentioned also, that OECD said that we will assume that these AEs, AE1 and AE2, these two AEs are dealing with themselves, are interacting as if they are independent. And when the two companies, or for that matter even two persons, they become independent. I am independent, I am not related to you, you are not related to me. So when you will interact, when I will interact, when you will interact, we would carry in our minds our respective benefits, isn't it so? But as a parent, when you are interacting with your child, then you won't carry in your mind the benefit of your benefit, you will carry in your mind the benefit of your child, because child is associated to you, isn't it so? So similarly, OECD said that although these are related, but we are hypothesizing them as if they are independent. So as if they are independent, so when they become independent theoretically, so everybody, each of these entities should mind their own business, should take care of their own interest, and taking care of the own interest, behaving as if you are independent, means you are acting at an arm's length. I am not related to you. Stay away, stay at an arm's length. Literally, this is the literal meaning of the word arm's length, at an arm's length. If we would have been related, then there is no distance between us, then there is no arm's length, then we'll hug. Isn't it? We'll hug. But here, because we are independent, there is a distance, arm's length. Right? So when these separate entity approach starts getting applied, we see then the concept of arm's length starts coming into picture. Now, why is arm's length principle applied? Why is arm's length principle required? I'll tell you why. Arm's length principle, see, these are associated entities. Now, just for one moment, just forget that there was a separate entity approach. Fine. We have two AEs, part of an M&E group, country A, country B, and they are transacting. Fine. And we also have two independent companies, company C and company D. Same, they are situated in country A and country B. They are also interacting. Two situations. Here the interaction is between AEs, and here the interaction is between separate entities, meaning to say independent parties. And let's for that matter assume the same property, IP and royalty, same IP and royalty, same property is getting transferred. Same IP is getting transferred. Fine. But here we have M&E group and here we have independent parties. So I'm asking you, I'm telling you, why is separate entity approach required? It is required because of the fact that here the association that AE1 and AE2 have with each other, this association will allow them, this interlinkage, that they are a part of the same group. This association will enable them to have special conditions. This association allows them, AE1, AE2, enables them that they can impose special conditions in their interaction. What do I mean by special conditions? I mean favorable terms. You give me a patent, you give me an IP, you give me a patent, I will charge very small royalty fees. You give me a patent, I will charge a very small license fee. You license this IP to me, you license this IP to me and I will charge very less royalty fee from you. Is it possible here? Yes, it is. Because they are associated. Can parents say this? Yes. Parent and child, special relationship, special condition. But is it possible here? Is it possible here? In case of independent entities? No. Because whenever independent parties would interact, each one would take into mind his benefit. So they will interact at arm's length. So OECD member countries incorporated the separate entity approach in order to nullify the effects of these special conditions. Is it clear? Separate entity approach helps the tax administrations or the countries to nullify the effects of special conditions that M&E groups can impose, and they do impose in their transactions. Is it clear? So OECD member countries, in order to eliminate the effects of special conditions in the interactions between M&Es, they have adopted the separate entity approach. And how is the separate entity approach applied in practice? That, my friend, is applied with the help of arm's length principle. So till this point, whatever discussion we have had, this was the background, the need for ALP, the source of TP, the source of ALP, the source of TP is ALP, and this what we have discussed. This is the source of ALP itself, right? I haven't seen anyone discussing separate entity approach. No, it's ALP. Sara kahani shuru hi. I mean, the story starts from ALP. Oh, ALP. I believe it should be clear. Okay, na? Separate entity approach is required in order to nullify the special conditions, the effect of special condition. And how do we apply the separate entity approach in practice? Separate entity approach is applied in practice via ALP, arm's length principle. So now our next stop is ALP. Let's move. I am going to rub this. Fine, it should be clear to everyone, I believe so. Again, many of you might be feeling it's slow, it's very slow. Believe me, once it is clear, you will move at a very rapid pace. Trust me. So the next stop is ALP, arm's length principle. Quite a mouthful, arm's length principle. In short, again a terminology, new term, ALP. Fine? ALP. So till now we have seen TP leading to SEA, separate entity approach, and SEA now we know has led us to ALP. Fine? Okay. So SL, this has led us to ALP. And I have already told you that ALP was required in order to nullify the effects of special conditions. ALP was required in order to nullify the effects of special conditions that M&Es might impose in their interactions. Fine? Okay. Now, again, food for thought and a very important point. What is ALP? Characteristic feature of ALP. Now we are on ALP. Background is over now. ALP, the characteristic feature. Characteristic feature. This should be interesting. Characteristic feature of ALP. ALP is a reference standard. ALP is a reference standard that OECD member countries and even the other countries of the world. ALP is a reference standard that the countries have adopted for determining. ALP is a reference standard. ALP is a principle that countries have adopted as a principle for determining transfer prices for tax purposes. I repeat, ALP is a reference standard that has been adopted by the countries, including OECD countries, to be used for determining transfer prices for tax purposes. And you know by now, you know the meaning of transfer prices. Fine. So ALP is a reference standard that is adopted by OECD member countries and other countries to be used as a reference standard for determining transfer prices for tax purposes. Just in a moment I'll reveal why am I stressing on this in such a punctilious or finicky manner. Wait. Again, referring to the glossary, and this will surely give you an insight, even for the seasoned guys. Okay, so where do we have ALP? Right. Glossary, page number 19, OECD Transfer Pricing Guidelines, in short TPGL, I call them TPGL, Transfer Pricing Guidelines, TPGL, glossary, page number 19, second definition, arm's length principle, reading verbatim, I am reading word by word. The international arm's length principle is the international standard that OECD member countries have agreed that should be used for determining transfer prices for tax purposes. Exactly what I said. A reference standard to be used for determining transfer prices for tax purposes. Now, what is the catch? The catch is, see, so the characteristic feature becomes reference standard for determining transfer prices for tax purposes. ALP is a reference standard for determining transfer prices for tax purposes. It means when we talk about transfer prices, there can be, and in fact there are, or there can be two situations. There can be two transfer prices. Pay attention, pay special attention here. There can be two transfer prices. One transfer price, AE1, AE2, MNE group, I am not drawing the circle. MNE group, AE1, AE2, MNE, fine. They interact and they set a price. They set a price in this transaction, and that price is a transfer price, right? That price is a transfer price. And mind you, that price, for example, say $100 for any property, I am not mentioning, $100. This $100 is the actual transfer price because it is actually paid from AE2 to AE1 for any property, tangible, intangible. This is the actual price, actual transfer price between these two entities in the interaction. Fine. This is the actual transfer price. Fine. And then, and mind you, this is, as I said, actual transfer price. So there are two arrows emanating from this transfer price. One is the actual, and then when these AEs, when they are tax professionals, they go to their respective tax authorities for filing the return. At the end of the year, they would file return. They would go to the respective tax authorities, and when they would go to the respective tax authorities, they would mention a price, they would quote a price, and when they quote a price, that price has to be that price which they quote for tax purposes. Obviously, these two companies, when they will go to the tax authorities, they will go for tax purposes, right? When these two entities, their respective tax professionals, they go to their respective tax authorities for tax purposes, they will quote a price in their returns. And mind you, my friends, that price which is quoted for the purposes of tax, that price has to be conforming. That price has to be determined in accordance with the arm's length principle. So that price which is quoted for tax purposes, that price has to be arm's length price. And mind you, this arm's length price can be different. I'm literally shouting. This arm's length price can be different, and in most of the cases it would be different from this actual transfer price. So we have two transfer prices. The actual transfer price, which is actually seen in the actual transaction between the AEs, A12, and then we have a price which is quoted for the purposes of tax by the respective entities when they go to their tax authorities. Whenever they quote that price has to be abiding by the principle of arm's length. So that is an arm's length price, and arm's length price can be very much different from the actual transfer price. And believe me, as long as the transfer price quoted by you in your tax return for tax purposes conforms to the ALP, as long as the price quoted in your tax return conforms to the ALP, believe me, tax authorities will not touch you. Even if this actual transfer price is way ahead, way more, way less, way different than this arm's length price. Is it clear? Very important. So why am I saying? Because it is very clearly mentioned, this characteristic feature, that arm's length principle is only a reference standard that has to be used for the determination of transfer prices for tax purposes. My dear friends, arm's length principle has got nothing to do with the actual transfer prices which are seen in reality between one or more than one AEs. But as long as you are going to the tax authorities, which you have to go, so when you are going to the tax authorities, the price in your return has to be conforming, has to be calculated, has to be determined in accordance with ALP. If tax authority, what you might be wondering, adjustment, they do not take place like this. Adjustments take place, tax authorities, they propose adjustment because they feel that the price that you are quoting is not arm's length price. Is it clear? The disputes between tax authorities, they arise not because of this actual transfer price, but because of the fact that they say that the price which MNEs are quoting, which AE is quoting, which you might quote, that is not ALP. My guarantee, take a price which is ALP, do proper study, do proper benchmarking, take a price, do soil farm analysis, do soil comparability analysis, and take a price which is ALP, and then tell the tax authorities that this is my ALP price for tax purposes, and then tell them that this is my actual transfer price and this is different. You dare even touch me. This price, tax purposes, ALP. This price, they won't even see. They are not bothered. They are not bothered with this. Fine. Very important. I have not seen, at least for the last 5 years, I am very active on LinkedIn. I have not seen so many big hyperbolic concepts. I have not seen discussion on these root levels. So please keep in mind that ALP is a reference standard for determining transfer prices for tax purposes. It has got nothing to do with actual transfer price. Fine? I believe it should be clear. And I can prove it. The second paragraph, first and second paragraph, chapter 1, first and second paragraph. If you read the guidelines, वो तो पढ़ाऊंगा मैं. I'll make you read. If you join, I'll make you read everything. Chapter number 1, paragraph number 1.1. This chapter provides a background discussion of ALP, which is the international transfer pricing standard that OECD member countries have agreed should be used for tax purposes. Full stop. Second paragraph, immediately beneath that. Towards the lower half. it is important to bear in mind that the need to approximate arm's length conditions, arm's length price arises irrespective of any contractual obligations undertaken by the parties. That is, irrespective of the actual transfer price, you will have to approximate arm's length price whenever you go for tax purposes. Show them this. Right? So this is the characteristic feature of ALP. Next milestone. We move ahead. So now we, just give me a moment. So now we've seen the background of ALP, we've seen the characteristic feature of the ALP. Now we'll go to the actual ALP, right? The concept and the statement. Finally, ALP, arm's length principle. Concept and the constituents. Concept, constituents, elements, and legal basis if you want, legal basis also. Legal basis. So as far as all these things are concerned, they are available in Article 9.1 that I read in the beginning of the class, wherein we had the definition, the categorization of associated entities, Article 9.1a and 9.1b. Right? Now, if you could please refer to the screenshot that I sent you. Please open that. If you can do so, please open that, because we will go through the ALP, the definition and the legal basis in a very detailed manner. Right? So I believe you would open, and I will open the guidelines from where I sent you that screenshot. In fact, it was screenshot number 2. In fact, screenshot number 2. First one is associated enterprises. I think second screenshot. Right. Screenshot number 2. Second screenshot. Statement of the arm's length principle. I believe you have opened. Fine. So I'll read it very slowly. Page number 31. Chapter 1, arm's length principle. Statement of the arm's length principle. Article 9 of the OECD Model Convention. Paragraph number 1.6. Very, very important. Okay. Just look at the first indent where you have that where in brackets. Are you seeing this? Where they have written where in brackets because between this where and between the second word conditions, you had 9.1a and 9.1b. They have not replicated those 9.1a and 9.1b here because they assume that you would have already read and understood what is meant by the associated entities, associated enterprises, right? And we also know by this time, that what is meant by associated enterprises. So we're not going to dwell upon that. We're going to read it as it is presented to us, right? Where conditions are made or imposed between the two, again bracket, associated enterprises. Are you seeing this? So they are referring to AEs, where conditions are made or imposed between the two associated enterprises in their commercial or financial relations, which differ from those which would be made between independent enterprises. Don't worry, it's a long one, very, very circuitous and very, very complicated. We'll clear that. which differ from those which would be made between independent enterprises, then any profits which would, just eliminate, just don't read this, but for those conditions, leave this, which differ from those which would be made between independent enterprises, then any profits which would dash have accrued, which would have accrued to one of the enterprises, but by reason of those conditions have not so accrued, may be included in the profits of that enterprise and taxed accordingly. Very, very complicated. If you read it first time, you will literally bang your head. I think OECD should have done a better job in using a simple terminology. No problem, we have to live with what we have. We'll see this. I'll demystify this. I'll clarify this. Fine? Just look at this. For the sake of clarity, I have divided this entire single sentence into 5 parts. 5 parts. I not write the entire definition here. You have that. But I'll write the leading words from where each of those 5 parts begin. So the first part begins with the word conditions, right? Article 9, definition of ALP. Article 9(1). Okay, here. So the first constituent is conditions. Conditions. First part begins. Conditions are made or imposed between two AEs. Right. The second part is in their commercial or financial relations. In their commercial or financial relations. Third part, which differ from those which would be made between independent enterprises. Then fourth part, then any profits. Then any profits. Which would have accrued to one of the enterprises, but by reason, just leave that. Which would have accrued to one of the enterprises, but have not so accrued, may be, then any profits which would have accrued but have not so accrued, and then the last fifth part, may be included in the profits of that enterprise and taxed accordingly. So this single sentence I have divided into 5 constituent elements. Divide and conquer. Fine. Full statement, very difficult. Divide these 5 and you will find out. Fine. Where conditions are made or imposed in their commercial or financial relations which differ from the conditions, then any profits that would have accrued may be included in the profits of that enterprise and taxed accordingly. Now, let's look at I'll use this half of the board. Right? 2 situations, 2 interactions. Country A and country B, company A and company B, and these are not AEs, these are independent parties. independent parties, independent companies. Fine. One situation, two countries, two companies, company A, company B, independent parties. Another situation, same two countries, country A, country B, but now we have what? Obviously we will have associated entity 1, associated entity 2. And they are part of the same M&E group. We know this. That is why they are AEs. Fine. Again, same example. A transfers a property, tangible, intangible. A transfer property, tangible, intangible, and gets paid. Transfers property, IP, gets paid. Same IP, for example, is transferred between AE1 and AE2, IP, and then get paid. Suppose here the payment is, for example, here the payment from B to A is, say for example, $100. This is $100. This is $100. And in this case it is $50. This is only $50. Fine. So $100 here and $50 here. IP getting transferred. A licenses a patent to B. B pays the royalty. That royalty fee is 100. AE licenses an IP, similar IP, same IP theoretically. But AE2 pays AE1 only $50. Fine. Now look at those elements. Those elements are saying that when conditions are made or imposed, where conditions are made or imposed in their commercial or financial relation, the first part. Now we are seeing that clearly there is a difference in the conditions between A and B and AE1 and AE2. Yes or no? Yes. There is a difference between AE1 and AE2 and A and B. Why? Because these two are related and these two are part of the same M&E group. That is why the conditions are different. What condition? The price, the contractual terms, the risk element, the circumstances. These are different conditions. And in this case, the conditions are different. Why? Because here A and B, they are not related. So, where conditions are made or imposed between two associated enterprises. Article 9.1 is talking about associated enterprises. So, this is saying that where conditions are made or imposed between two associated enterprises, conditions where in their commercial or financial relation. The second part, different conditions. Yes, we have seen. Why? Because they are a part of M&E group. Why? They are AEs, they are a part of the M&E group. So different conditions. Now those conditions where they are imposed, those different conditions are imposed in the interaction between them. What interaction? Commercial interaction. What is a commercial interaction? Obviously commercial interaction is nothing but a transaction. Right? So different conditions where conditions are made or imposed between two AEs in their commercial or financial relations. Part 3, which differ. We know that the transaction is same, but these conditions here are different from the conditions in this case where the parties are independent. Right? So which differ from those conditions which would be made between independent enterprises. All the three elements, all the three constituents are satisfied. Conditions are different. Conditions in case of AE are different compared to the independent parties. These conditions are made between AE1 and AE2 in their commercial relation, that is in a transaction, and they are different from the conditions existing between the independent parties. So element number 1, element number 2, element number 3 all satisfied. So ultimately we go to part constituent element number 4, which differ from those conditions. Then any profit which would have accrued to one of the enterprises, then any profit which would have accrued to one of the enterprises. Now see here, what is the profit? A transfers IP, B pays A. Supposing we assume that this entire 100 is profit. I know it's not the case, but let us for that matter assume. So A gets paid $100, fine, and in this case A even gets paid only $50. So what is the profit that should have accrued to A1 but has not so accrued because of the special conditions? $50. If these special conditions were not present, then AE1 would have also been paid $100. Now it is getting paid only $50. So it is seen that only $50 are accruing to AE1. So this is the fourth element. Then any profits which would but for those conditions have accrued to one of the enterprises but have not so accrued may be included in the profit of the enterprise and taxed accordingly. So therefore all the conditions are satisfied, and that is why Article 9.1 is saying that special conditions, yes. Different from independent parties, yes. This leads to less profit being accrued to AE1, yes. So it is saying that therefore you will add $50 more, 50 plus 50, you will add $50 more to the profits of AE1, and then accordingly you will tax not this 50 but you will tax this 50 plus 50, 100. Because if you will do so, what will you achieve? You will achieve the condition that has existed between the independent parties. These conditions and these conditions are what? These conditions are nothing but the arm's length conditions. Why they are arm's length condition? Because these two parties are not related, and because these two parties are not related, they have arm's length condition. And now because you have added $50 to this 50, you have increased the profits to 100. So now you have achieved the same arm's length conditions in case of this interaction between two AEs. So this is the discussion regarding the concept or the statement of arm's length principle that is given in Article 9.1. Fine. Now after the class, if you will read the statement given in the guidelines or even the model tax convention, I am very sure that you would be able to understand what exactly is meant by the arm's length principle and what is the meaning and how do you apply that in practice. Now there are certain few more terms here. I'll discuss those as well. Now independent parties, associated entities. Now interaction between A and B, this transaction T1, and between AE1 and AE2, this transaction T2, this transaction between two associated entities A1 and A2, this transaction T2 is known as a controlled transaction. New terminology, new term, very very important. Controlled transaction. Controlled transaction. Controlled transaction. Controlled transaction. Why controlled? Obviously because you are controlling the conditions. You are deliberately imposing special conditions. How are you able to impose special conditions? Why? Because you are the part of the same M&E group. Because you are the part of the same M&E group. Because you are associated. Because you are able to impose those conditions. Because you are able to control the terms of the transaction. That is why the transaction that you have is a controlled transaction. Very, very important. So controlled transaction is a transaction that takes place, that occurs between two associated entities, A1, A2. Fine. On the contrary, what is this transaction T1? T1 is, if this is controlled between A's, then what it is? This is uncontrolled. Fine. So this transaction T1 is uncontrolled transaction. Uncontrolled transaction. Why it is uncontrolled? Because it is unconditional. A and B are looking for their own benefits, or they are looking for their own individual benefits. They are not related. Because they are not related, they are not a part of the group. That is why they are not associated. Because they are not associated, that is why each one of them, A and B, they are caring for their own benefits. They are not related. They are not controlling the transaction, and because they are not controlling, that is why the transaction is uncontrolled transaction. Right? So uncontrolled transaction is a transaction between two independent parties. Uncontrolled transaction is a transaction between two independent entities, and a controlled transaction is a transaction between two associated entities. Fine? So this is the concept and the constituents. What are constituents? Those 5 parts that I had mentioned, where conditions differ, profit, any profit. Those 5 elements, those were the elements of the ALP. 1, 2, 3, 4, 5. You need to check one of them, each one of them. Number 1, check. Number 2, check, as we did. Those are the constituent elements. Legal basis, Article 9.1. Concept, explained. Controlled, uncontrolled. So the entire field, now we have seen quite a many terms, quite a number of terms. The entire field, you know what is the basic problem of transfer pricing? The basic problem of transfer pricing, if I am to summarize this entire discussion and even the subsequent discussion, the basic intention, the basic objective, the basic desire of field of transfer pricing is to replicate, to duplicate or not duplicate, to replicate the conditions existing here. To replicate the conditions existing here, that is between independent enterprises here. To replicate the conditions of uncontrolled transaction in this setting. Getting a point? To replicate the conditions of uncontrolled transaction in the controlled settings. This is the basic objective, basic endeavor, basic desire of transfer pricing. Herein lies the key. Uncontrolled independent, controlled associated, and you want to, if you are able to demonstrate that even if I have associated entities, but in spite of those associated entities, the conditions that I have in my transaction are uncontrolled, are like uncontrolled transaction, then it means you have satisfied the arm's length principle. Is it clear? This is the basic concept of arm's length principle. Fine. So I think we have done quite substantial. We have covered quite substantial. Right. Yes. So we have done. So now we move on to the further. So we've seen the background of ALP. Background of ALP was TP, separate entity approach, characteristic feature of ALP. That was the background. Now we have seen the ALP, the concept, the constituent elements, and the legal basis. Now we move on to the application part. Application. The last screenshot that I sent you. The last screenshot that I sent you. Application of ALP. Application of ALP. In fact, before you refer to the last screenshot, I would request you to refer to the second screenshot. Please do so. Then we move to the third one. The second screenshot. Second screenshot was, I believe, page number 31. Page number 31, Statement of the Arm's Length Principle, Article 9. Please do read this when you go home. And I have amply demonstrated in the class, explained very thoroughly in the class, how do you understand, how do you visualize, apply, conceptualize this arm's length principle. Fine. And I am very sure, I am almost 100%, I am 100% sure that you would be able to now, you would be now able to make sense of this complicated definition. Right? Okay. So even beyond that paragraph, beyond that indent, if you now come to the main paragraph, in the main paragraph, because the separate entity approach treats the members of an M&E group as if they were independent entities. You discussed that. Because the separate entity approach treats the members of an M&E group as if they were independent entities, therefore the attention is focused on the nature of the transactions and on whether the conditions differ from the conditions in uncontrolled transactions. We have seen what is the meaning of uncontrolled transaction. That is a transaction taking place between independent parties. They are uncontrolled transactions. So what this is basically saying is saying that we will focus our attention upon the conditions of controlled transaction, and we'll check whether those conditions differ from the conditions in uncontrolled transaction. I have explained to you that. Fine. Now, such an analysis where you compare the conditions of controlled and uncontrolled transactions. We just now did P1 independent, P2 associated. Such an analysis where you compare the controlled transactions and uncontrolled transaction, this is known as comparability analysis. It goes on to say that comparability analysis is at the heart of the application of the ALP. Fine. So application of the ALP, it means when you are saying that you want to apply ALP in practice, then you don't have to do anything, but you have to do what? You have to undertake a comparability analysis. Comparability analysis. You have to undertake a comparability analysis wherein you will compare controlled transaction, controlled XNS transaction. Comparability analysis, you will compare controlled transaction with uncontrolled transaction. This is between independent parties, this is between associated entities. When you say that compare, you mean to say the entire things. What all things need to be compared, that remains a big question. Conditions, there are conditions and there are other factors which forms the part of the subsequent discussion. Okay? So by this time you should have had definitely a very clear understanding and very solid grounding in what is meant by ALP, separate entity approach, concept of ALP, and then what is meant by comparability analysis. Specifically, OECD uses this term that comparability analysis lies Comparability analysis lies at the heart and soul. It is the heart and soul of the application of ALP. ALP, when you say that you need to apply ALP, you are doing nothing but you are basically applying, you want to apply comparability analysis. Now if you refer to the third screenshot if you would refer, to the third screenshot and paragraph number 1.36. Okay, you don't have that screenshot. Fine. So I'll tell you what exactly how do you apply comparative analysis. That will be the last portion for this discussion. Fine. So application of ALP done by comparability analysis. Application of ALP done by comparability analysis, and how do you compare? How do you undertake a comparability analysis? Comparability analysis is undertaken in two steps. Comparability analysis is undertaken in two steps. This is actually given in paragraph number 1.33. Do read this. Paragraph number 1.33. Paragraph number 1.33 says that how do you undertake comparability analysis? Two steps. Step number 1 and then step number 2. Step number 1 says that first of all you will identify this is a transaction AE1, AE2, a controlled transaction, right? Transaction T1. In step number 1, you will identify the commercial or financial relation. Identify the commercial or financial relation existing between the parties. Identify. There are steps. There are ways how do you identify the commercial financial relation that form the part of subsequent discussion. But this is what is said. These are the steps. Identify the commercial or financial relations existing between the enterprises. Along with, you have to identify this. Plus, you have to do something else. Identify the commercial and financial relations and the conditions plus economically relevant circumstances, ERC for short. Step number 1, identify the commercial or financial relations between two AEs along with the conditions attaching to those relations and the economically relevant circumstances in which these commercial and financial relations occur. This is, if I am to summarize this simply means that you have to thoroughly investigate, thoroughly analyze this transaction. And each of these terms, commercial and financial relation, this is nothing. Commercial and financial relation, this is nothing but the transaction T1. The conditions and economically relevant circumstances. Conditions and economically relevant circumstances that is mentioned here in step number 1. Conditions and economically relevant circumstances are known as, combined together. Conditions and economically relevant circumstances combined together are known as economically relevant characteristics. Economically relevant circumstances and economically relevant characteristics, or better known as comparability factors. This is the screenshot number 3 which I had sent to you, paragraph number 1.36. Right? If you go to paragraph number 1.36, that is the third screenshot that I sent you. It says the economically relevant characteristics or comparability factors that need to be identified in the commercial or financial relations between AEs are categorized as follows: 1, 2, 3, 4, 5. Okay, and just above that, paragraph number 1.35, that says that these economically relevant characteristics consist of the conditions of the transaction and economically relevant circumstances in which transaction takes place. That is, economically relevant characteristics consist of the conditions plus circumstances. Combine them, you get this. This is nothing but this is equal to comparability factors. Comparability factors given in paragraph number 1.36. Fine. So beyond this, then you start applying an analysis of those individual 1, 2, 3, 4, 5 conditions, that is economically relevant factors, economically relevant characteristics or comparability factors, and that leads you ultimately to FAR analysis. Fine. It's almost 8:51, so I'll stop here because then you will have further discussion. Ultimately, this was the point. This is the basic discussion, which is background, which is required to bring you up to the understanding that how do you conceptualize a transaction. Till this point, you would have conceptualized the transaction starting from, I'll repeat, starting from TP. We started with TP, then we moved to separate entity approach, then we took ALP, characteristic feature, concept, legal background, and then we have started the application of the ALP. So beyond this is the application of ALP in terms of those paragraph number 1.36. Paragraph number 1.36, take it from me. Paragraph number 1.36 is one of the core paragraphs of this entire exercise of TP analysis or comparability analysis. You need to have a very clear understanding, very clear conceptualization of those conditions, and mind you, abstract, it's not abstract, abstract nahi hai. I mean, abstract to hai, but that is what makes TP difficult. I mean, just as a rambling anecdote, few days back, I was going through a LinkedIn post, and a very, very seasoned TP professional who I respect a lot, very, very seasoned TP professional, she said that even after 15-20 years, we are having the same discussion that TP is abstract, guidelines are abstract, they are very difficult to understand, TP is very difficult to practice. Come on guys, we know that TP is difficult. This is something that we have to live with. So my dear friends, my dear fellow aspirants, my dear seasoned tax professionals, if you felt that this was very basic, you felt it correctly, this was meant to be basic. I have no idea how much of it was already known to you, but because this batch was supposed to be the ADIT Preparation Batch, this was supposed to be the first class, that is why I had to cover this. For ADIT aspirants, very, very important, every word of what I have said, very, very important, because this is what will lead you to at least 50 to 70 marks paper is from this portion, TP. And even for seasoned tax professionals, get these concepts clear in your practice and you won't find any difficulty in. All in all, if I were to convey my simple message to all of you who have joined, many of you have left also, that's not a problem. My simple message is, if you want to practice TP or even for that matter tax treaties, then don't go for shortcuts. Shortcuts will lead you only to a certain point, but beyond that you will again stumble, and when you stumble you will be engulfed in such quagmire that will be very difficult for you to come out. Go with the basics, learn with the basics, learn yourself, doesn't matter whether you join or not, learn yourself, but be slow because it's abstract. And apart from TP guidelines, there is no other text, no other book that is required. I can give you that in writing. Apart from TP guidelines, if you want to master this subject of transfer pricing, there is no other book that is required. Case laws are different, that is something else. Case laws will come and go. TP guidelines, they will not go anywhere. So now, because we have already reached the fag end of the discussion, so I wanted to discuss that case, Apple case. I don't know whether you would be willing or not. It's only what. Shall we keep it for next time? Or do you want to have a brief? So let me draw the diagram at least. I'll draw the diagram for that Apple case so that my promise is fulfilled. What I had promised to you in the beginning. I'll draw the diagram. Apple Ireland decision came in mid-July 2020. Right? Very brief discussion. Apple is an MNE? Yes, it's an MNE. So Apple Incorporated, based in the US, parent company, head company. Where are the headquarters? Apple? Cupertino, they are the headquarters. Right? Infinite Loop, the campus is named as Infinite Loop, right? Apple Inc., this is US. Apple Inc. fully owns a subsidiary that is also in the US, and that is known as Apple Operations International, AOI. Apple Operations International, AOI. 100% subsidiary of Apple Inc., the parent company. Right? This is US, this is Ireland, IR. Apple Operations International fully owns Apple Operations Europe. Apple Operations International fully owns Apple Operations Europe, and Apple Operations Europe in turn fully owns Apple Sales International, ASI. You see? Apple Inc. fully owns Apple Operations International. This fully owns Apple Operations Europe. This fully owns Apple Sales International. These two are in US residents. These two are incorporated in the Ireland. Apple Operations Europe, Apple Sales International, incorporated in Ireland. They are incorporated in Ireland, but mind you, the catch, they are incorporated in Ireland, but they are not Irish tax residents. I mean, the corporate law of Ireland says that you can be incorporated in the country, yet you might not be a tax resident in Ireland. So they are incorporated in Ireland, but they are tax residents of some other country. Fine? Keep this in mind. Now, these two companies, these two Irish companies, AOE, Apple Operations Europe, and Apple Sales International, they have Irish branches, permanent establishments. Branch. Both these companies have branches. The case did not use the word PE, so I'll also not use the word PE, but branch is a permanent establishment. So it's a branch. Irish branch. This is also a branch. This is also a branch. So Irish branch of Apple Operations Europe, Irish branch of Apple Sales International. This was the structure. Apple Ireland decision was rendered in mid-July. I think 16th July 2020. Mid-July 2020. What was the case? Case per se, case was not TP related case. It was a case that hovered around the interpretation of the EU law, European Union law. And mind you, don't get bogged, don't get scared if you haven't heard this. This was meant for the seasoned tax professional. So I hope at least one of them is present here. Fine. So the case was not related to TB per se, the case was related to the interpretation and application of the EU law, European Union law. In particular, it was related to Article 107 of TFEU, Treaty on the Functioning of the European Union. This Article 107 relates to state aid. Article 107. Apple and Ireland, they were on one side, and on the other side was the European Commission. Apple and Ireland, they were on one side, and on the other side was European Commission. European Commission was alleging that Ireland has given Apple an unfair advantage. European Commission was alleging that Ireland has given Apple unfair advantage, and because they have given Apple an unfair advantage, that is why this has violated the state aid law of Article 107. Fine. This was the case of Commission. Ultimately, the Commission lost in this case. But now this case has gone to the upper court. I mean, this decision was rendered by the General Court of Justice of the European Union, CJEU. So now they have gone to the upper chamber, right? But in this decision that came on mid-July, Ireland and Apple, they won, and European Commission lost. Now, what was the European Commission's case? What was their allegation? I told you their allegation that they said that Ireland has given undue tax advantage to Apple. How they proposed that this unfair undue tax advantage was given to Apple. They said Apple Inc. licensed certain intellectual property to Apple Operations Europe as well as to Apple Sales International. IP license, and in turn royalty was paid by Apple Operations Europe to Apple Incorporated, royalty, and similarly royalty was paid by Apple Sales International also to Apple Inc. Apple Inc. licenses IP to Apple Operations Europe as well as to Apple Sales International, and Apple Sales International and Apple Operations Europe, they pay royalty to Apple Inc. Now European Union was suggesting, European Commission suggested, or they alleged that this IP should have been attributed. This IP should have been attributed not to AOE or ASI but to the Irish branches. IP should have been attributed. I mean, this is way advanced. IP should have been attributed to branches, and because the IP should have been attributed to the branches, that is why the profits should also have been attributed to the branches. And because the profits should have been attributed to the branches, that is why the profits of branches should have increased. And how did they propose to calculate the profits that they proposed that should have been attributed to the branch? They said that these profits should have been calculated. The profits attributed to Irish branches should have been calculated by the application of ALP. Don't get confused who are beginners, because till now the discussion was the application of ALP between AEs, associated entities, different company, one company to AE1, AE2, but here there are no AEs. There is only one legal entity, AOE and ASI, and you have a branch. So this is one legal entity, this is another legal entity, and we are not talking about this transaction. This is ownership. There is no transaction between them. But they are saying that ALP should be applied in the transaction between AOE and branch, like this. This should be a transaction. This transaction. This transaction. So ALP can also be applied for attribution of profits to branches, or ALP can also be applied to the attribution of profits to the permanent establishments basis Article 7.1 and 7.2 of the OECD Model Tax Convention, and that has the basis in 2010 OECD report on attribution of profits to permanent establishments. So ALP can be applied, is majorly applied between AEs that we were seeing, but it is also applied when you are attributing profits to permanent establishments. This was for very seasoned professionals, if at all they are still there. But my promise, I have kept my promise. So with this, I conclude this today's first session of the International Tax Academy's inaugural lecture on the basis of transfer pricing. Believe me, I enjoyed, because this was an upgrade on my knowledge as well. I enjoyed, although it is exhausting. I thank each one of you who are present here, who took time out of your weekend for joining us, even those who have left. Any queries, you can contact me for any doubt clearing, and you have my number, WhatsApp number. I'll again write it on the board. It is 08851663073. 8851663073. This is the WhatsApp number of International Tax Academy. Do let me know any comments and any feedback that you have, and for further updates I'll post it in the group. Thank you very much, so very much again. For ADIT parents, very important, do revise. If you have taken notes, you should have taken notes. Do revise this, because this is what we will do, take up when we take up the last. There's a query that Mr. Deepak wants to know. Deepak, I will give me some time. I will post, because till today my entire focus was on making this class as rich content wise as possible. And believe me, I was under tremendous stress, not because of the content. This is a very small board. I had ordered a very big board. I had to keep on rubbing it on. I had to rub it again and again. I had ordered a very big board from Amazon, but Amazon ditched me for the first time in my life, and then I had to scramble for a board. So don't worry, I'll let you know. I'll let you know. Thank you, Rahul. Thank you so much for your comment, and I look forward to your comments in the group. So I'll conclude the session. Thank you so much. Do revise. Stay in touch. Namaskar. Thank you. Oh my God.